Welcome to the future. Thank you for joining me for episode 4 of Seeking Delphi. I'm Mark Sackler. Today we take on the ever-challenging subject of the stock market, and specifically technology stocks. Will Rogers once said of stock picking, if it don't go up, don't buy it. The problem with that approach is that the public tends to get in on uptrends when they are almost played out. Quite simply, too much in, too late. Professional stock market pros do somewhat better, but often have difficulty beating the overall market indexes. So what about futurists? You don't have to be a futurist to know that technology is a hot subject these days, and not just in the popular press, but the stock market as well. Recent months have seen some dramatic upward moves in several technology stocks, and many technology sector funds have also done well recently. Will it last? And what is the best way to pick technology investments, not just for now, but for the long term? For years, I personally was troubled by a bugaboo common to futurists investing in stocks. It's not that I picked the wrong stocks, it's that with my long-term anticipatory view, I often would get in and out too soon. Well, it turns out there's a very useful tool for avoiding this pitfall, the Gartner Hype Cycle. I talked about this recently with Jim Lee. He's founder of StratFi, short for Strategic Foresight Investors, and he's the only person I know who is both a professional money manager and a professional futurist. Let's listen to what he had to say about technology investing for the future. Jim, welcome to Seeking Delphi.
Thanks for having me.
You have kind of a unique combination of talents as a professional financial manager and a professional futurist. Give us a little bit of your background in terms of how this came about and how you combined the two.
Sure. So I've been in the financial industry now since 1991, and I've always been interested in finding different tools to help me answer the question of what happens next, right? So I started out as a chartered financial analyst and got really familiar with accounting statements and spreadsheets. I've been doing technical analysis since I was a kid almost, and that involves looking at price movements within stocks to make short-term forecasts. And then I picked up my graduate degree in Studies of the Future at University of Houston, which is the same program that you went to. So, we have that in common.
Give me a 40,000-foot view of your approach to applying your futurist background to investing, technology investing and any kind of investing for that matter.
Yeah. I track changes in innovation and also social trends as well. And what I've found is different types of analysis work well for different time frames and different questions. So if you look at what the discipline of strategic foresight can do, it can help you find where the opportunities are over the course of the next 10 to 30 years. The really big picture, 30,000 foot overview. In the shorter term, when you go in sort of the 3 month to 3 year time frame, I find that financial analysis and competitive analysis tends to be very useful in terms of looking at company valuations, growth, health of revenues, integrity of their earnings, and so forth. But on a day-to-day basis, the best way to look at stocks is through technical analysis, basically through price momentum, support and resistance points, etc. So what I try to do is I try to find the right industries, the right companies, and do it at the right time. And it took me about 15 years to put together the skill set to enable me to do that. And my work at the University of Houston was a really important part of that package.
Now, you say that you've got an approach for the longer term, like 10 to 30 years. That calls to mind perhaps the greatest investor of all time, whose time frame is perhaps forever. That would be Warren Buffett. Would you say he's kind of like the ultimate futurist investor?
If you actually look at Warren Buffett's portfolio, it tends to be in fairly old line industries. He is a deep value investor. He's more of a disciple of Benjamin Graham, as it were. And if you look at his portfolio, it's more consumer staples, it's insurance, it's tobacco, it's in those companies that are called cash cows, generally not at the early stage of their growth cycle, generally later at their income stage of their cash cycle. Now Warren Buffett's kind of interesting because he actually uses a 1960s financial model known as conglomeration, where you take a very high PE multiple stock, such as Berkshire Hathaway, purchase low PE multiple stocks, and by doing so, you get an immediate sugar hit or accretion to earnings. So not a lot of people talk about that, but in a lot of ways, it's sort of a throwback to an earlier era, but it still works. So more power to them.
So you talked about cycles, and one tool that technology investors in the know are aware of, at least the people at the professional level, and it's something called the Gartner Hype Cycle that's used for evaluating where technologies are in their cycle. Could you explain the Gartner Hype Cycle to us and how you might apply that?
Sure. So the Gartner Group is an information technology consulting group, and every year they come out with the Gartner Hype Cycle, which talks about where technologies are in this cycle that they go through from inception to maturity. And the hype really talks about how well received or how enthused the public is about these technologies. And it goes through 5 different stages. The first stage is where you have a technology trigger that says that something is possible. It's going to happen in a laboratory or at a university, and it's going to be way off the radar screen. Nobody's really going to know about it or acknowledge it at that point. And then you're going to see more attention paid to that technology, first through academic journals, then maybe industry journals, and then eventually the mainstream press, where that technology goes from being virtually unknown to being actually overexposed. And this is called the peak of inflated expectations. So you go from the point where something is possible to where just anything is possible. People are just exuberant about this technology. But that's misplaced because the technology is not actually mature yet. So the public interest actually drops as you go from the peak of inflated expectations to something called the trough of disillusionment. And that's what happens when technology goes through some false starts. It may have some misfires. Maybe you have some companies dropping out of the industry, and interest sort of starts to wane. But then it gets better, and as the kinks get worked out, that technology goes up what's called the slope of enlightenment, and then moves on to the plateau of productivity, where it becomes a productive part of everyday life.
That sounds to me a little bit like, or a lot like, what happened with the dot-com bubble in the stock market around 2000. Would you say that's kind of a prototypical example?
I'd say that's a tremendous example, and it's also a good example of why it's important to combine the hype cycle, which is a foresight tool, with financial analytics and also technical market analytics. Because in that peak of the hype cycle, you're seeing companies trading at 100 times revenues, if they even had revenues, right? And you're seeing multi-billion-dollar valuations for companies that didn't even have products. So if you look at that first leg up on the hype cycle, what you have are companies with very weak financials and negative cash flows, but great price momentum. And then when stocks come off that peak, in many cases you have stocks that are completely overvalued with negative momentum. So on that leg up, you have a trade, sort of a buy and sell, sort of move quickly in and out. And then on the downside, you have the short, right? And then that third leg up is that rise from the slope of enlightenment to the plateau of productivity. That's actually the sweet spot for long-term investing, because you have a positive trend from a foresight perspective, you have growing and improving financials, and you have positive price momentum. And that's where I actually think some of the best entry points are.
All right. Now, if you'll allow me to indulge your participation here, I'm going to hit you with some of the various technologies that are kind of in the news right now and ask you to analyze where they are in the hype cycle currently. Let's start with autonomous vehicles.
Absolute peak. Oh my gosh. Yes. 4 or 5 years ago, nobody was really talking about this. Now, pretty much every automotive manufacturer is on board. Really interesting to follow the conversation that's going on with Uber in Pittsburgh, right? So Uber just unveiled its first autonomous cabs in Pittsburgh, largely because of the affiliation with Carnegie Mellon's robotics program. What they're finding is they have autonomous cars, but they still need to have engineers with college degrees behind the steering wheel, because they have problems negotiating bridges, other drivers, and birds, right? So not quite ready for prime time yet, but still a really interesting idea.
Sounds like there's going to be pushback not just from the cab drivers and the Uber drivers, but maybe from the Audubon Society, huh?
Right.
At any rate, okay, let's
they do break. Yeah, they do break.
Mm-hmm. On the other side of the scale, how about 3D printing?
3D printing is, I think, heading up the slope of enlightenment. 3 or 4 years ago, it was at a peak of inflated expectations, and I made a ton of money on 3D Systems Corp and Stratasys, and it was a beautiful thing. Those stocks crashed and burned hard. And what they've found out is that three-dimensional printing is not a way of rapidly producing lots of product. It's very good in small lots of very customized products, and we're learning how to use it, right? And our expectations are becoming in line with reality at this point. So worth taking a second look at that, or at least, putting it on your shopping list.
Okay, how about Internet of Things?
Internet of Things, hugely investable trend. And it ties into a lot of subcategories as home, including smart cities, connected homes. I'd say robotics might be an Internet of Things application, automated cars, Internet of Things. And what this trend is about for listeners is connecting the physical world to the Internet to create a situation in which nothing is lost, stolen, or broken over time. And this has been a really big trend, not only on the semiconductor side, not only on the wireless side, on the chip side. I would say that Internet of Things has probably peaked, or it's close to the peak right now, but it's also maturing really rapidly, and I don't think you're going to have a big dip on disillusionment on this one. It just seems to have some legs to it, I would say.
Okay, we've heard a lot in the news the past week, and I've mentioned it on my blog, and we'll do more so at the end of this podcast on my closing remarks. Mm-hmm. CRISPR-Cas9 gene editing.
Still early. We are just past the innovation trigger. When I speak to groups of people, a lot of folks don't know what CRISPR is. So we're not at peak hype at this point.
Artificial intelligence.
That's an interesting one because AI has been around since the 1960s and almost feels like it's gone through more than one hype cycle, right? This time around, it seems to be climbing, not yet hitting peak frenzy. We're going to be hearing a lot more about this over the next 5 years. So it's got some room to mature. Lots of progress has been made. I don't think we're market euphoria yet, but it could be one of the next ones.
Okay, virtual reality and augmented reality.
Yeah, so virtual reality is hitting the slope of enlightenment. We've seen some consumer products being rolled out by Samsung. Facebook made a major investment in virtual reality a year or two ago with the Oculus Rift. Lots of interest there. It's happening and it's real. Augmented reality actually takes a little bit more computational power because not only do you need to be able to create the images and the graphics, but you need to make them location sensitive and relevant as well. So that's, I'd say, a few years behind, but we'll be hitting that point of the slope of enlightenment within 5 years or so.
Yeah, peak of hyped expectations to me kind of was what that Pokemon Go craze looked like a few months ago.
Yeah, I think you're right. Yeah.
One last item, and that's the thing that I spoke about in my last podcast, and that's the hydrogen fuel cell vehicles.
Wow, that's been a long one. That's been a long time coming, along with next generation rechargeable batteries. And it just feels like there's been disappointment after disappointment in the rechargeable battery area. Fuel cells, I think, hit peak hype probably 4 or 5 years ago. They're still on the downswing to the trough of disillusionment. People haven't been paying attention to that yet. But I would say that will also hit productivity within, I'd say, 5 to 10 years, maybe 15. But it's been a much slower cycle for that technology.
So let's wrap things up with one final question here, and that is, if I'm looking at a timeline of, say, 5 to 10 years or more, right now, what do you think would be the best, not necessarily companies, but general technologies, if I'm looking for longer-term technology investment right now?
Yeah, the things that I get excited about include robotics, the Internet of Things, blockchain, and artificial intelligence. I'd say when you go beyond that time frame, you really need to look at genetic technology, right, in terms of CRISPR and sequencing and the applications of that to healthcare.
Timing-wise, maybe not the best time to get into CRISPR, you think, or?
It's still really early, and when I look at things, there's sort of a sequence between the trade, which is the buildup of hype, the short, which is the collapse of hype, and the investment, which is when it's sort of safe for people to go in if they have, a more conservative disposition. And when I look at CRISPR, when I look at genetic sequencing, it's in the trade phase right now. People aren't making a lot of money. It hasn't hit overexposure yet. There's some upside, but it's too early to commit on any kind of long-term basis just yet.
Got it. Okay, Jim, thank you so much for your time, and maybe we'll make this a semi-regular check-in here to see how some of these things are doing.
That'd be wonderful. I'd enjoy that.
All right, take care. Bye-bye.
You bet.
A graphic of the Gartner Hype Cycle is available on the Seeking Delphi webpage, along with all relevant links to today's content. And if you want the last word on which way the stock market is headed, I quote a piece of wisdom author Milton Fisher once gave me. It will continue to fluctuate. Moving on to the week's future-related news, A study conducted by the Imperial College of London and the World Health Organization forecast an average life expectancy of 90 years for South Korean women by the year 2030. But it also found that Asian women in several U.S. states already have a life expectancy of 90 or more. This contradicts a long-held notion that average life expectancy above 90 would not be possible without means to treat the aging process itself. And on the subject of treating the aging process, Dr. George Church of Harvard University predicted that reversal of the aging process using genetic editing will be possible within 10 years. This contrasts sharply with David Wood's forecast that was the subject of the first Seeking Delphi episode, that of a 50% probability of the availability of human rejuvenation therapy in 25 years. And finally, NASA announced a stunning discovery. There are no fewer than 7 Earth-sized planets orbiting a nearby dwarf star. At least 3 of them are in the so-called Goldilocks zone, where liquid water, and with it life as we know it, could exist. If they're hard up to name these 7 objects orbiting a dwarf, I have a suggestion. How about Grumpy, Sleepy, Sneezy, Doc? A reminder that Seeking Delphi is available on iTunes and YouTube, as well as at www.seekingdelphi.com. You can also follow us on Facebook. Thanks again for joining me. My technical assistant is Mohammed Maroof. Until next time, I'm Mark Sackler.